is now the time to buy? Could the market crash, or am I going to lose money? If we were to look back in 2020, there were a lot of people that were like, ooh, I'm not buying in 2020. The market's going to crash. 2025, house prices, they're still way higher than they were in 2020.
Welcome to The Flow, Real Estate and Money Show, a show focused on helping Canadians understand the different elements of real estate, mortgage, and finance. The goal of our show is to provide Canadians with the tools, information, and knowledge to have more success when it comes to their investing and real estate related decisions going forward. My name is Alex McFadyen, and I'm your host. I can't wait to get you into the flow.
Suffice to say the market took a beating is about the wildest of understatements you could possibly have in this type of a market. Just a few days ago, last week, the market lost more than $6 trillion in value, wiped off of North American stocks. The US administration is standing firm on the tariffs, as we know, with absolutely no plans for Mr. Trump to pull back. That is shaking consumer confidence in a way that we have not seen since, well, COVID, I suppose, but other than that, 2008, which is the last time we saw consumer confidence this brutal. In fact, what you're looking at right now, if I can share a chart on the screen, if you're listening to the podcast, just imagine you're looking at a chart with a big giant spike at the end, is a record share of almost 60% of Americans who think business conditions will be worse in 1 year. The confidence levels have fallen off a cliff, and that's an unbelievably negative sentiment for some that basically have dealt with some of the worst recessions of all time between 2008 and 2020. Crazy situation. Well, closer to home, Canadians are wondering not only how does this impact me with an upcoming election, but what's going on in the housing market. In BC, for example, the uncertainty is really starting to make an impact in the housing market, cooling off sales, with buyers hesitating and inventory starting to rise. Interestingly enough, although average price points have dipped a little bit, they've held really steady in this type of market. And the question is whether or not that continues for long, or with the potential of interest rates coming down, will that have an impact on the likelihood of interest rates of house prices starting to trigger back up? I guess we'll wait and see. Guys, if you don't already know, welcome back to the Flow Mortgage and Money Show. I'm Alex McFadyen, otherwise known as the Mortgage Pug, the owner of Flow Mortgage Co., while we try to make sense of some of the ever-changing developments as it relates to real estate and money. For today's episode, I'm going to unpack some of the economic developments, the tariffs, the market fears, and what exactly is happening in real estate, specifically in BC, but some of the other areas of Canada, because there's really just a lot going on right now. Now, I mentioned some of the bullet points before that you definitely need to be paying attention to. That $6 trillion number in stock value lost in literally a couple of days is, I don't want, it's not unquantifiable, obviously, because it's $6 trillion, but that is something historic and something that's literally never happened before. With Trump basically signaling, it's almost like that meme with Trump sitting there as the dog in the fire. If you can picture this, basically saying, it's okay, everything will be fine. He's basically saying he's standing pat on what he's going to do. And this trade war situation, it only looks like it's going to make things worse with the United States. As you may know or may not know, a trade war can equal higher inflation expectations, and it could put impact on interest rates overall. There's almost these two dynamics right now that are opposing, that are about to smash heads. And it looks like essentially the current US administration is saying, we're just going to let it happen. We're going to watch and see what happens. Now, closer to home, I mentioned this earlier, and I definitely want to touch on some of these bullet points before we go deep diving into it in some of the episode right here. The tariff uncertainty in the marketplace combined with the elections, those two factors has really, and again, if you're looking on YouTube, I'll put the graph in there. If you're not, just imagine you're looking at real estate sales and you're looking at a graph and you're seeing them basically just drop right off a cliff. Now, this is not real estate prices. This is real estate sales. And that's very important to make sure that people are aware of, because real estate sales can obviously have an impact on price points over time, but motivation is obviously what would impact sales and prices as well. And the price points, interestingly enough, have not followed the same route. Although I imagine if this will continue, we'll start to see things come down in the price point sector as well. Now, in the context of real estate, we talked briefly about tariffs, but I think we should make some clear points. Tariffs equal higher material costs because of the taxes, which has a potential impact on housing starts, which is one of the reasons I think that mid to long term real estate values are not going to just fall off a cliff and stay off a cliff. They'll eventually bounce back up because they're going to, yes, build less homes, and building less homes leads to a supply issue. Even with less immigrants in the country or in Canada or the United States for that matter, it'll continue to put upwards pressure on prices, whether or not it's this year, next year, down the road. It is a reminder that real estate itself will always be that long game, especially in spite of these crazy situations we're dealing with right now. Now, confidence is the fuel for housing markets. You probably know that already. And right now, we just mentioned it, we're running exceptionally low. The chart that I mentioned that shows the 60% of Americans believing conditions will be worse in a year is really, really important to consider. In Canada, what we've noticed specifically is a very fragile job market. I mean, the employment stats just came in late last week on Friday, and employment among Canadians over 25, which is the core demographic that we're looking at, just took a hit. I've got some bullet points here that I want to share with you to look at, what that looks like. Unemployment itself was steady, but slightly higher year over year. So it's up to 6.7%. But the thing that's really interesting and I don't know if shocking is the right word, but something to pay attention to is that full-time jobs lost, which is the big one, we were up to 53,000, which was the first major dip since 2022 when interest rates started going up. So we've seen a pretty big job loss for full-time jobs. And that's really significant because if you look at overall jobs can include part-time jobs, non-guaranteed incomes, casual employment, and so forth. But if we look at full-time jobs, that is someone's living wage. And there is a significant consideration as it relates to what that looks like. Also, in addition to that, with wage growth softening right now, we've seen it go up 3.5% year over year versus the expected amount of 4.1%. It means employers are less comfortable doling out raises and are more willing to stay pat because they don't foresee as much money coming down the pipe right now, which is the case right now with current employment levels and current salaries. Now, as it relates to the mortgage market, what's important to know about that, of course, the correlation is that soft wages and job losses are a little bit of pressure on that borrowing capacity. And while we've seen interest rates come down significantly, in fact, to the tune of 1% over the last 6 months or so, which increases borrowing power, counterintuitively, when we see people making less money or seeing more job losses, it works against that, which is another thing to consider as we look at this upcoming potential renewal wall, which everybody is talking about at this point right now. I mean, a weak labor market outlook might prompt BOC to provide more rate cuts, which would be an interesting conversation, especially as you're looking at interest rates. On Friday of last week, we saw bond yields completely dip, which usually impacts fixed interest rate mortgages. It hasn't immediately because we went into a weekend. The question mark is, will we see that interest rate drop continue on the fixed rate side? And will we see the BOC have pressure to reduce interest rates based on what we've seen as it relates to increasing tariffs and increasing expenses, and of course, all the other things we just talked about right there. Now, in Vancouver, just to talk about this more, January numbers gave us a really mixed bag. So for you on the West Coast, sales were actually up 9% from the previous year, but they were still below the 10-year average, which again was probably not surprising considering we came off an exceptionally low last year and the marketplace is still expecting interest rates to come down. And we've got this renewal situation with some people with lower interest rates. But the big thing that I mentioned earlier that we need to be paying attention to is that inventory, which is the amount of homes for sale, is climbing very fast. Prices are remaining stable for now. But with these economic shocks that just happened with the stock market, real estate pricing, again, as I mentioned, could follow. Just digging into that and digging into the bullets here from a context, and then I'll talk about it more from a practical perspective as far as what does this mean for you. GVA, so Greater Vancouver Area, January 2025, sales were up 8.8% year over year with about 1,552 sales, which, again, not an insane number, but a higher number for sure. But the crazy thing is it's still like 11% below the 10-year seasonal average, which means there's less homes for sale. Sorry, a lot of homes for sale. There's less homes selling than have been over the course of the last 10 years, which is a pretty good sample size. But the interesting thing to note here, and this is the thing, like we don't want to get to too many stats because it becomes overwhelming. But if you look at the stats, the amount of homes for sale is up huge by over a third, 33%. year over year, which is dramatic. That's a massive, massive increase to be considered of. Flat price in January, basically on all housing prices. Now, we've heard of, and we've seen some of our clients going into multiple offers with unique properties. In fact, an interesting observation, which I'll touch more on as we go forward, is that I've seen more multiple offers in properties that I probably never would have really expected it on. Like, for example, houses way outside of Vancouver, like land, detached houses, specifically with land, that have old rundown houses where people are literally going into multiple offers, and in places like the Okanagan as well, like not even in the main cities, like an hour to 2 hours outside of the main cities, we're seeing these properties go for multiple offers out of almost nowhere. And people are really just looking for land right now, which is an odd and interesting consideration for me. So the takeaway from all this information, initially speaking, is that higher supply may stall price growth. And a tipping point in terms of like prices actually coming down could come from continued economic stress, whether it be because of tariffs or if interest rates do not come down. But if we do see rates come back down or continue to come down, whether it be on the fixed rate or the variable rate side, I do believe that will continue to fuel the market until, and this is a big if, until and if we get to the point where rates are around that 3.25 mark, where that stress test no longer actually has any bearing, going any lower than that on the market. So what I mean by that is right now the stress test is the greater of 2% or 2% above the rate or 5.25%. Now, most mortgages right now are stress tested in the high fives or the mid sixes, some or low sixes for that matter. But if we see rates go down another 75 basis points, we'll get to a point where the stress test is kind of at its bar, and by continuing to go down, the affordability will no longer go up. So if we were to go lower than that, we could be at a point where we don't see any more upwards pressure because of interest rates, and it will just come down to what's happening economically speaking with job losses or job gains or the overall marketplace and what's going on in that arena. Now, practically speaking, the question for a lot of people who are listening to this right now is, if you're a homeowner or a buyer, you're probably wondering, like, is now the time to buy? Could the market crash, or am I going to lose money? And those are real good questions. Now, I'm also hearing these questions from real estate agents because, I mean, there's two sides of the coin. Like, hey, it's like the stock market. It's like when the stocks go down, historically speaking, that's the time you want to buy. They're on sale. Well, a lot of stuff that's going on right now is pretty unique, but you could have said that historically about COVID. You could have said that historically about what happened to a degree in 2008. Like, just looking at those questions from a logistical perspective and analytical perspective and nothing else. Typically speaking, if you're a buyer in this marketplace, you're probably someone who actually wants to buy a home. We can't forget that real estate is not only an investment for families, it is a shelter, a place to buy, a place to provide stability. It is a home. There are so many things outside of the obvious of, is real estate the best timing, or can I buy real estate for the best prices? Because, I mean, if we were to look back in 2020, there were a lot of people that were like, ooh, I'm not buying in 2020. COVID is here. The market's going to crash. There's all this stuff happening. And now if you were to look back and, obviously 2025, house prices, even though they went up to 2022 and they came back down in 2024, 25, they're still way higher than they were in 2020. And so we just have to look at it from a market perspective. Right now, a balanced market would mean you have negotiating power in most properties, apparently, not all. Right now, we are in more than a balanced market. We are in a seller's market as it relates to the amount of listings compared to buyers. With inventory continuing to grow, like, the biggest thing that people don't think about from the outside, if you're just watching YouTube videos and trying to understand the marketplace, is that one of the key differences in a market where we see prices crash or if we see prices hold steady, especially as it relates to multiple listings, is that when we see multiple listings, it means that there are more options. Not necessarily that prices will always be pushed down, because there's a limit to how low people will actually go before they sell, with the exception of the odd few or foreclosures. A lot of people are just looking at it from a standpoint of having more options. And that is often enough. I mean, for me, even myself as a buyer and investor, I'm starting to look at this marketplace and saying, well, in this type of market, I could probably buy different properties that I never would have been able to buy when I bought my property last year, which is a very enticing consideration for someone who's not actively searching, honestly, just searching around right now in this marketplace. And if I were to sell and buy in the same market, then what does it really matter as it relates to the market? So I think from a seller buyer perspective, and from a home buyer, like a first-time buyer perspective, the benefit right now is the amount of options and the negotiation power of negotiating on dates, negotiating on other terms can be beneficial to you, and probably not just prices. If the BOC cuts hold, like if they continue cutting in the next cycles, of which right now there's like a 50-50 chance, according to the markets, of BOC cutting rates in the next April announcement, then, and if that actually happens, that occurs, we could see a situation where, again, there's another push back into the marketplace and there's more interest depending on what happens. But we also might see people wait until after this election is over before they make a move, because there's always reasons to wait. The question of, is the market going to crash, is one that comes up typically in TikTok circles among trolls. But I mean, let's be honest, there are some people who are thinking in their minds like, well, the stock market just crashed. Could the real estate market crash? At this time right now, based on there just being lots of listings, there's no real sign of a crash. There is the possibility of prices softening slightly, but more stable as opposed to a crash. It would be more of like a stable softening if that were to happen. And if that happens, there's also the possibility that people take their homes off the market, which could hold price points as is. Unless there's some kind of like major economic disruption in Canada, like a massive or deep recession or some kind of financial contagion outside of what we've already seen, it's unlikely that we see this crash. Of course, some will argue that we will see those things. And if that's the case, then you can argue that that will happen. But right now, there's no current indications those things are going to happen. And the big question always for most people is like, do I buy into a marketplace like this? Like if you buy with a 5-year or a 10-year horizon, the downside risk is way lower than the upside risk to purchasing real estate right now. I mean, if you're purchasing a property right now and you're like, well, this is a property I'm going to live in, I'm going to raise a kid in, or I'm going to own it for as long as I need to because I can live there. You have a 5-year, 10-year horizon, then there's really very limited downside risk associated with that type of a timeline on buying real estate. What I would do is I would focus primarily, if I were a home buyer in this marketplace, on my affordability. So making sure I have a clear budget going into said property and not push myself to an uncomfortable place, and that you have holding power. Don't try and time the peaks and the valleys. I've never really seen anybody be able to do that or put themselves in a situation where they've been able to do that. Now, the question mark that a lot of people are asking right now over and above this as it relates to mortgage rates is, why are they sensitive to tariffs? And I do want to explain that because I had this question come out to me before. So tariffs, they equal inflation, and with inflation, central banks are less likely to cut rates if inflation goes up, which means rates would stay high. And this is in response to a video I posted last week where I said, hey, interest rates could actually go up according to many economists who suggest that we will see inflation in the marketplace. Now, there's no guarantees that happen, but that is why that could happen. The other question is, are fixed rates going to drop soon? Well, bond yields are very volatile. We mentioned this earlier in the episode, but if the lower BOC rates cut, like if the BOC continues to cut rates and we see these yields continue to go down, then yes, we'll start to see a little bit of relief in the fixed rate marketplace. What you need to look out for if you're getting a mortgage right now with us, my team and I, or with anybody else, you need to be asking the question is, could I renegotiate or refinance my mortgage? And if so, what are the penalties to do so? Because in this type of a marketplace, that's what people aren't thinking about, but that's actually where the opportunity is. Get in, get your mortgage. If you take a fixed rate loan, understand your prepayment penalties so that you can make that renegotiation later. We had a lot of conversation about this at the tail end of last year, and people are starting to bring it up again. But now we're starting to see those penalties become volatile and be too expensive for people to actually break and make the move. Now, the question about should I wait for lower rates before buying is always a tough one. Timing rates is pretty tough. If the home fits and you can afford it, we say go for it. You can always push your closing dates out 120 days. Anything that might happen is probably going to happen in the next 3 to 4 months anyways. And with our team, we do what's called a rate look back because some lenders allow us to float the rate down. Your bank won't do that proactively for you. Plus, you can get a pre-approval to hedge your risk in case rates remain the same or went up, and it provides you with a rate hold going into the current marketplace. Now, remember this. Headlines right now are exceptionally noisy, but informed actions that you would take can cut through a lot of the noise. If you found that this information, this episode, like what's happening behind the scenes has been helpful, one thing that I ask for you is please hit the subscribe button on this actual podcast or this YouTube video. And if you or someone else you know is looking for mortgage advice, hit me up in the comments below, or you can find me on Instagram at the Mortgage Pug or at Flow Mortgage Co. And we can help you with your current upcoming mortgage for your existing property, investment property, or future property. Again, signing off. I'll see you on the next one. That was an unreal episode of The Flow. I hope you enjoyed it as much as I did.
on my side right here. If you haven't already done so, make sure to check out all of the incredible resources that we have available. You can find us on Instagram at Flow Mortgage Co. You can find us on our website, getflowmortgage.ca. And of course, don't forget our free first-time homebuyer masterclass that's currently available on our website for anyone who listens to the episodes. And if you loved what you listened here today, the only thing that we ask for is to share this with someone else that you think this could help. And hey, maybe leave us a great review online.